Okay, let's quick sound check 1 2 3, and then we can get started once audio is clear. Welcome back, everyone. Okay, just waiting. Okay, right. So audio seems to be good on my side. Welcome back, everyone, to this Friday. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so this is going to be one of those sessions where we actually don't have any slides. We are going to talk about trading strategies. I'm going to show you a few trading strategies that I find particularly useful. Next week, we will continue on this. We will start to break down what you need to build your own trading strategy. That's going to be next week. Pretty much the last webinar for the year, right? Okay, anyway, this is trading strategies. Let's just get started. Might actually request a few things from you guys. We can try out a few things just to see if that trading strategies works. But I'm going to start very simple here. We are going to start with a blank chart, and we are going to go back and test it out. All right, welcome, a beginner in Forex trading. Everyone, most of you guys are beginners anyway, so welcome to the right place. All right, 1500 here, sounds clear. All right, is this a good place for a beginner to start? Yeah, you could start here. It'll be good if you watch the previous webinars, but I mean, it's okay. I mean, we're talking about trading strategies here, so I'm not going to throw in something really hard. In fact, I'm actually going to show you a simple strategy to go through. I think we should be able to cover about 3 as an example tonight, right? So I'm going to start one where you actually trade without any indicators. I call this naked trading. So basically you're trading without indicators. So let's pick Euro USD in this example. We can try it out on others if you want to later on, and I'm just going to go with a bar replay. So let's start somewhere in around December. What's the date today? Today's the 23rd. So let's start on the 23rd of December. How's that? Okay, so we've got this right now on the 23rd of December. Now, the one strategy that I want to show you, it's actually a naked trading strategy, which is a simple strategy where we actually find or try to box a certain range in the market and then trade on breakouts, right? It will be as simple as that. Okay, so right now, this is 23rd of December 2021, rewinding 1 year, and then we'll use the same strategy and apply it throughout the year, see what happens, okay? Okay, what do you need? Nothing else other than horizontal lines. So if you can draw horizontal lines on your chart, then that's going to be a good start for you. Okay, so let's begin. And I'm just trying to find out. Oh yeah, there we go. We got the button there. Okay, so number one, we'll take a look at this area first, right? Because this is where price is currently stuck in, right? And we are assuming, as if you're trading today, that's what you look at that particular time during the on the 23rd of December 2021. Okay, this is on the daily time frame. We'll use the daily time frame so we can actually speed up through the years. But taking a look at this, see if I can zoom it in, right? What you want to do is actually to identify one swing high and one swing low. In the case of this one here, we will take this one as the lowest point in the market, and that would be the swing high where market is actually currently trapped, right? So the logic behind this is if it breaks to the upside, and I'll explain particularly what it means by breaking, we want to go long. Okay, and then the other side is automatically going to be, so whenever that candle closes, your stop loss would be on the other line, right? If it breaks to the upside, if it breaks to the downside, then, you know, the other range, the upper resistance is going to be your stop loss. That will be your initial stop loss. There are several issues with this trading strategies. Number one is actually it's a little bit tough to figure out potential exits, right? But in terms of stop loss, at least you got that covered. So in terms of risk, we got that covered. Okay, so right now that's the logic, right? So we'll see what happens here, and let's just start moving this. Okay, so everything is still inside the range, and we have a break to the upside. So when we see that break to the upside, we basically want to go long, right? Your stop loss is going to be there, but notice what happens here before it breaks. You can actually move your stop loss closer if you want to, but we'll get on into that in a minute. In terms of target level, initially, you know, this is actually designed to be more of a trend following strategy, right? But just in case if you want to use a specific level to use as a target, then we can look at maybe around 1650, because there was a little bit of resistance there. You can use that as your initial target if you want to. All right, let's move on. I don't even know if this trade is going to work out, but we're just going to continue on. Okay, so that's basically you got stopped out, right? We got stopped out, and this trade number one would mean that it fails, right? See, I'm not cherry picking on anything like that. I'm not going to show you just the good trades. I'm going to show you an example based on dates, based on random stuff, right? And then we'll move on. Simple as that. So we got trade one failed. That would be your first failure on this one here. So trade one, we can label it as an X, right? So we failed that trade, but we're gonna live it. And then let's see what the market does. Okay, so the market created a new swing in the market, right? And we would then take this. So the range got a little bit wider. We'll take that. All right, so we are in new territory again, and let's go on. Let's continue on. See if it breaks to the upside again, or is it going to break to the downside? Right, it breaks to the downside here in this case, so we would short here. Okay, and having your stop loss there. Okay, so let's run this. In terms of target levels, we would just extend it a little bit further, just because it's trend following. But I just want to show you in terms of trading, when it comes to trading strategy, I don't care what the exit levels are. Sorry, I do care about the exit levels. To me, the target level or the potential gain would be secondary. The number one criteria for me would be able to identify where the stop loss is going to be. Okay, so let's continue. See if this trade works out. All right. Okay, so trade's going in our favor, right? And notice one thing here. See, this is the reason why I don't want to have a specific target, because we could actually ride through all of them, right? And you know, the ideal way to look at this is that you would try to look at previous levels if possible. You know, if you have a specific target, for example, maybe at 1.07, 1.06, you know, you can actually start scaling out of your positions. That's something that we are going to talk about next week, right? So in this case here, just assume we're not taking any profits, like we don't have any specific targets. How do we manage this trade then? Okay, because if we take a look at how the market moves, this movement here, this pullback here, it created a new swing high, right? So I can actually cap this over there, and that's your cue to start moving your stop loss to that high over there. Okay, so number one, you're starting to minimize your stop loss, right? When the market continues to go down a little bit more, notice what it does. It actually created another swing. So you could technically be locking your profits from your entry here to there, right? So this is going to be your entry. Sorry, let me get this there. Oops, that would be your entry, right? So we could actually start locking in our profits. So we would start moving our stop loss. Instead of being there, you would actually move your stop loss here. It's just that with TradingView, I can't actually show you where to move the stop loss, but let's just assume that we are moving our stop loss for now. Okay. It would be a 0, and this would be something that you already have. This is something that you already gained, right? And then the market continues to go down. It starts creating a little bit of a resistance. Sorry, not a resistance. It's really more of a swing. Then you can actually move your stop loss there. Okay, so you would then move your stop loss from up here to down here. Okay, does that make sense? So this strategy, it's really simple. You actually don't have anything other than, you know, price behind you, right? So I would just really extend my stop loss, because at this point in time, I've already locked in my profits. I entered there. You know, if you take a look at the range here, we are now about 421 pips in. Okay, so let's continue. Let's continue. Right? Okay, so we got stopped out. We got stopped out pretty much there. So that means you would get stopped out at this level at 421 pips, right? Right around there. Okay, so this strategy, it's really more on a trend following strategy. If the trend goes on and on, this is actually a good thing, right? The other thing with this one here, every time you move your stop losses, at the same time when you move your stop losses, there's actually going to be a new level for you to go in for a short. So you can technically go in for another short to add into your position over here, having your stop losses there, right? So this, it's meant to be trend trading strategy. It's meant for you to start adjusting your stop losses. You can scale out of your positions, or you know, reduce your positions, or you can actually add in more into your positions. Okay, does that make sense? Simple as that. All right, so let's clear this off. Now we're done. So we got one trade that was taken out, right? And then we've got several trades that we could actually go in for a short. Okay, so let's clear this off and let's start again, because we already saw how the market moves, and then let's find out what to look for. Okay, we got taken out, all done. Our short trade is done, done, and done. So we're now fresh again. Right now we are in May 2022, right? Halfway through the year. So with this, we would identify a few things, obviously, because this would be a breakout for you. This would be your stop loss. So you could actually go long here and your stop loss is there. Now with this one here, we've got previous target levels to play with. Obviously, you can start having your target levels there, or maybe, you know what, I'll leave it a little bit at about 1.5. Okay, so let's see what happens. See if we can add more into our positions. Okay, it's just going flat, 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 flat. Not hitting your stop loss, not hitting your stop loss. Oh, you got stopped out again, right? So when you got stopped out, that's part of the that's part of trading, obviously, because we are trading naked. We're trading based on price. We don't have any other information. We don't have any other information to confirm the underlying trend, which is going to change because this is number one, right? Because I was asked the question yesterday on Wednesday, should I be trading with indicators or without indicators? So I'm going to show you how to trade without indicators, right? And it's simple as that. Now we do have a new swing, a new high, right? And then we have a new low. So you can technically go short on this one here. Let's see, the answer that I gave last Wednesday, if you were here last Wednesday, someone asked, is it better to trade without indicators or is it better to trade just based on price, right? If you're trading based on price, as I said, you are trading with one eye closed. If you get it right and you ride the trend, then everything is going to be fine. But if you don't have any other information to tell you what the trend is or what the momentum is, then, you know, you are at a little bit of a disadvantage. Okay, so yeah, anyway, with this break to the downside, obviously you can go short, having your stop losses there, see whether this works out or not. Okay, right, it starts ranging, so you can actually start moving your stop losses there, right, if you want to. Okay, to minimize your risks. And then you probably got stopped out at a smaller amount of risk. Okay, so you can trade without strategy. Okay, and this is one way to trade without indicators. This is a strategy that you can trade without indicators. The problem with this, though, you are trading without the full knowledge of what you could have, right? That's what all the other indicators are for. So I would say with this one here, this is a great strategy. This is a great strategy if you are an investor. If you are willing to have a big stop loss and you're willing to be patient, then yes. But even with that, you would at least need to understand the underlying trend of the market. This one here, if we go without any indicator, again, you're trading without any knowledge of the trend or the momentum and stuff like that. But basically the cycle repeats, right? So you can take a look at this one here. Every time it creates a new swing, you could actually create a new breakout points. You can create a new breakout levels like so, right? Again, same rule applies. Break to the downside, that would be your stop losses. Simple as that. Okay, and it goes on. It goes on. Just like so. Okay, right. So do you think this is a great indicator? This is actually a great indicator if we actually manage to understand or catch the trend, because I can get out of this right now, right? And I would show you the trend in 2021. That X was where we actually failed to go long, right? We have a little bit of a whipsaw going on, but if you keep going on with that strategy, you would actually be able to nab a lot of the gains there. Now, the reason why it's actually hard to identify in the market is because the swing highs and the swing lows that we picked out just now was a little bit too close, and that's where you get stopped out a lot. Okay, so this wouldn't actually work on a small time frame. This would work on the hourly time frame. This would work on the daily time frame. 15 minutes, okay. 5 minutes, forget about it. Okay, so with this one here, if in retrospective, if we had continued on, I would prefer to continue on, but it kind of defeat the purpose of this session because we would be wasting a lot of time on it. But what I'm trying to say is, if you identify the range correctly, you could actually stay in that trend for a prolonged period of time, and every time it created a new high, you can actually start moving your stop losses all the way down, right? So you can move your stop losses there, you could move your stop losses there, you could move your stop losses there, you could move your stop losses there. Now, the reason why, in retrospect, if we look at it, it's fantastic. It's because we don't adjust our stop loss. If you don't adjust your stop loss a lot, you are actually going to be fine. So assuming that we leave the initial stop loss in the market, then we ride the trend, you would be okay. It just that it doesn't make sense, because every opportunity where you can actually reduce your stop loss, that's actually key to any trading strategy, right? You want to reduce your risk as soon as possible. So if you are able to move your trade to a break-even position as soon as possible, when it is at break-even, you're actually trading risk-free. Okay, and that's kind of the basic foundation of a trading strategy, which we will build on next week. Okay, but I just want to show it to you right now because there was a question, should I trade without charts, without indicators or anything like that? Okay. Things would be a little bit different if I start adding indicators into it. Okay, just a quick question out there. Some of you guys are new. What kind of indicators do you want me to use? Okay, what kind of indicators that you are familiar with? Just throw it in and I'll pick one. Oh, so there's a question. I want to know about that stop loss is not working in news. That's a very general question, right? How would anyone know what your stop loss is and whether or not your stop loss is relevant? Okay, modifying positions. Yeah, Joseph is saying modifying positions. Yes, with this strategy, obviously we want to trade on a breakout. The other range, if there's a breakout, is going to be your stop losses. If we're starting to go in one direction, for example, in a downtrend, every swing high that's created, that's your opportunity to adjust your positions. Ichimoku, that's a little bit cheating, Ichimoku, but we'll touch Ichimoku. For basic EMAs, for advanced Ichimoku, RSI, EMA, ADX, stochastics, RSI. I want to know about support, how we can identify the proper support. Aditya Bachav, we have a session specifically on support and resistance. I believe it was about 3 months back. EMA, okay. So let me show you a strategy using EMA, right? Ichimoku Cloud and RSI. This guy's answering, my trading strategy, but I just want to illustrate, because there was a question yesterday on whether or not you should trade without indicators. You can trade without indicators. You really can, and to great success as well, right? But you need to know when the market turns around. Like if I were to give you an example here right now, if I were to bar replay this, right? If I know that's the turning point in the market, so let me show you this, okay? So we've got this, right? Okay, so very close to this. This is obviously cheating a little bit, because I pick a time when we know where the reversal point is in the market. But when there's a transition in the market, it's all right to actually not be perfect all the time. Nobody is perfect when it comes to trading. No trading strategy is 100% accurate. So let's just be frank, especially to new traders. So don't assume that every trading strategy is 100% accurate. So for this example here, this is October. And we all know on October, I mean, you can go through my outlooks if you want to and stuff like that, but take a look at October. We were waiting for a little bit of a transition on the Euro USD, right? So with this one, see how this one goes up, right? We created a new swing that's a little bit significant here. We can actually start moving our stop loss there. Okay, so we're in this trade right now, and you know, we have a little bit of a resistance there. If that resistance break, can we add into our position? You know, that's the whole point with this one here, right? So okay, so it breaks, so I'm actually gonna add into a long position here, right around there. My stop loss would be down here because that's where it is before it broke out, right? So we can continue on. Oops. Right, and we're basically here. We're basically right now where we are right now. Okay, so during the period during October, and so we got two entries, right? This is obviously still running. We are assuming that's still running, right? One is targeting 700 pips. The other one is already running at, so let's just say the highest point was about 200 pips. Okay, so we'll just put it there. So you go from October till now. If we use the same strategy, then yeah, you would be able to gain 647 pips and 210 pips, which is super fantastic because that's nearly 1,000 pips add on, right? But as I said, without any indicator, you are looking at the market lopsided. It's only half of the story. Okay, we can add stuff. People are asking EMA, so I'm actually gonna add EMAs now. Moving average, and then we'll go moving average EMA. Okay, so with the EMAs, there are a couple of choices, right? Can you trade with one EMAs? You technically can if you want to. All right, let me just bring that up. Okay, so what would be the EMA you want to use? Should we use 100? Because I think a lot of people look at 100 as a trend indicator in the market. So yeah, we can trade when the EMA crosses above 100. So if there's a price transition above that, we would want to go long, right? So we saw that happen, so that's where we want to go long if price trades above the AMA. So is this a trading strategy? Yes, it is a trading strategy. So a trading strategy in a nutshell, when we talk about trading strategies, it's really more on what do you have in plan, right? Using EMAs in this case, yeah, it's great. Is it optimal? No, because you know, you might get an earlier entry, or you might get a better lookout in the market to maybe get in or get out, right? So if we have 100 EMAs, which is what I would call a slow EMAs, right? The higher the period it is, then I would actually call it more of a slow EMAs, right? So I could add in another EMA, right? In this case, I am going to make it a little bit quicker. 100, how about we put in 20? Okay, sounds great. 20 EMAs, all right? So with 20 EMAs, if we know and we use the 20 EMAs and the 100 EMA, technically you would have gone short from here, and you actually don't get out from your trade until that moving average crosses back out again, right around there. Okay, so if you go by EMAs, then you want to look at the point where the crossover happens. That's your entry point, your exit points. So is this a trading strategy? Is it a great trading strategy? Probably not the best, but you know, people uses EMA a lot, and there's a lot of variations on EMA. I'm just throwing it out right now because I'm really opening it up to you guys, because I don't want to cherry pick good trades, right? I could come here with a slide that show you perfect trades and stuff like that, but in reality, trading is not always perfect, right? Trading is not 100% guarantee on anything like that. So I'm opening it up to you guys. You know, this is supposed to be interactive. You guys let me know what you want to use and stuff like that, and I'll show you that trading strategy. I do have a few that I'll teach you tonight, but I want to show you first, right? Can we use any extra exponential moving average alone? Yes. 2 EMAs, even better, right? Can we stay in that trend? Obviously, you can stay in that trend. In fact, you actually stayed in that trend for a period of 359 days, right? Very close to 1 year. So within that 1 year trade, you would actually be in this trade for 359 days. 359 trading days is actually more than 1 year, but that's the length of time you actually would have to stay in the trade. All looks good, all looks fine, right? The question that I have for you is, if you're following this trading strategy, which looks perfect and stuff like that, right? Do you have the mentality to actually stay for 359 trading days and maintain your position, right? Your gain is significant. It's 1,457 pips, right? But if you don't lock in your profits, you don't know what's likely going to happen. You know, you could lose all that. Right now in this example, yeah, you're lucky because in the year 2022, the Euro USD fell like crazy. So again, we need a certain indication of where the market is going. EMAs can actually be used as a trend detector. So you solve one issues there, right? So can this be traded? Can this be traded? Yes, EMAs can be traded. Is this a good combination of an EMA, or is it a good maximum? Is this really maximizing your profit in the market? Probably not. Let me give you an example here, because if you short it here, right, and you base your trade just on these EMAs alone, then you're actually trading just one trade, right? For 1 year, you only open one position and you trade one single trade. That's not really maximizing your position, because if we take a look at what's going on here, there's a little bit of a pullback, pullback, and so forth and so on. Every pullback to me, every sideways condition to me is a trading opportunity. Okay, so that's the way I look at things. And you know, if you trade based on this, can you call that a trading strategy? Yes, you can call it a trading strategy. Is it an optimum, or does it maximizes your trading opportunity? It doesn't. Okay, we'll talk more about that next week. Okay, when we start building your trading strategies. So how about if we use EMAs? I'm going to show you something else, right? Instead of using EMA 100, right, I'll leave EMA 100. Instead of using EMA 20, I would use EMA 80, right? The reason why I use EMA 80 and EMA 100 is that EMA 80 and 100, or two moving averages that are very close to one another, is actually a good trend indicator. So I'm moving on right now to trend indication, right? So I want to know the trend in the market. Okay, so we saw a little bit of a crossover here, right? And then we actually have another crossover there, right around here. Okay, so from that point onwards, let's do one thing. Okay, I'm going to bar replay this back here. Okay, so We saw that transition below the EMA 80 below 100. So that would be the first sign of a downtrend. So we are on the assumption that we are within a downtrend. Okay. So we've got our EMA 80, EMA 100 as a trend indicator. How about we add two more EMAs, right? And I like this a lot. I used to trade with moving averages, right? So I love moving averages. It's just that I actually move on to something a lot better than moving averages, but in a nutshell, I still love this, right? So I use we can use 5. Let's change the color a little bit. Let's make it red. Okay, so I'll use 5, and for the other one, I'll use 21, right? A lot of people use 21, so I'll use 21, and let's make this green. Okay. Okay, there we go. So here's my take. We know the underlying trend is to the downside. Therefore, you will only be looking for a sell positions. That's a trading strategy that I'm actually going to share with you, right? Newbies, even expert traders know the saying that trend is your friend. But a lot of people just ignore it. So my advice to you is do not ignore this, because this is really, really important. Now we identify that the Euro USD is now in a downtrend because the 80 is moving below the 100, right? As long as the 80 is moving below the 100, we are only looking for a sell trades. Now, the requirement for this strategy is that for a sell to happen, right, 80 below 100 equals downtrend. Okay. 5 EMA move below 21 EMA, we will sell and only sell. Okay, let's take a look at how many trades you can actually do on this one here. Okay, let's go on. Let's continue on. All right. There we go. We got one sell. And what should I do? Should I use the short position? Okay, yeah. Okay, so I'll short here, and I'll use this highest point over there as a stop loss, which is right over here. Let's just make an assumption, because we're already assuming that the Euro USD is now in a downtrend and we want to sell. We are only looking for a sell. Okay, in terms of target level, I don't care. Let's just move it all the way down. Who cares? Whatnot, right? Let's go on. Go down, go down. Do we have a crossover? Yeah, the 5 EMA just crosses up. If it crosses down again, we want to go short. Okay, so we got another short position here. Now, stop loss, I would just place it the same, just for simplicity's sake. In terms of target, let's let it run. Okay, so let's go on. Let's move on. Okay. Oh, is it crossing? Is it crossing? Is it crossing? Very close, very close, very close, very close, very close. Is it gonna go down? Is it gonna go down? Yep. Okay, so we got another short position right around here, and I would just say let's move our stop losses to the same level. We can adjust it later, but not. The example here is that I just want to show you that, you know, how many times you could re-enter into the market if we modify our trading strategies a little bit. Okay, EMA 80 still below EMA 100, right? Do we have another sell? Yes, we actually have another sell, right? Right around there, we have another sell. Okay, we can go on. Stop loss, our target, will leave it the same, because this is more of a illustration. Okay, done. Right, another sell there for you. Bear with me here. This might look really boring. It's not, because I want to show you the difference. Remember just now the first example, you would have, if you just use EMA 20 and EMA 100, you would have gained 1,457 pips, right? Okay, so let's go on. So we're going with a trend, right? We're only looking for a sell. We're not even looking for any buys or anything like that. So we got another sell here. All right, stop loss is getting ridiculous because it's starting not to make sense because the risk reward ratio doesn't click. But again, this is just an example. Okay, there we go. Okay, we got another sell. Okay. Okay. We've pretty much exceeded our target level. If you want to go short again, you can actually go short. But let's stop here because I know this could go on like crazy, right? I know how far your USD went. But just judging from this, instead of one single trade that you could have taken with that one strategy, with this one here where you actually have 4 moving averages, 2 moving averages for entry, 2 moving averages for your trend detection. So basically there are 2 tools here. No matter what strategy it is, a good strategy would be able to tell you where the trend is going to go. And then the other one would be able to give you a short-term entry into the market. Okay, whether or not you want to go into the same direction or the opposite direction is completely up to you. But let's tally up, okay? So the first one here, it's already 1,959 pips, okay? So we can add it up right now. So instead of going with 2 EMAs, right, which was 1457, we are going to tally up 1929, okay, plus 1745 plus 1490 plus 1506 plus 1142 what's this, 721 plus 721 and plus 293. All right, got calculator up. I can calculate this for you right now. It's 1929 plus 1745 plus 1490 plus 1506 plus 1142 plus 721 plus 293. It's equals to 7256. Okay, so this is just an illustration. Okay, this is based on a stupidly simple trading strategy. So the whole thing with trading strategies here, do you want to apply these trading strategies to your trading? By all means, go ahead. Okay, the key point here is it's not the moving average. It's not that the moving average is bad. It's just that some people use the moving average in a bad way. But if you use it correctly, this is a powerful tool. I mean, between August 2021 to October 2022, 7,256 pips on the Euro USD is a lot, right? And you know, anyone that trades, if you are new, I'll be honest, statistically, I don't think new traders are actually going to be looking at 7,256 pips in their first year. I'll be honest, right? And this is without having our stop loss hit at all. Okay, so is this a valid trading strategy? It is a valid trading strategy. there's the problem with this trading strategy that I just gave you is that this is on the assumption that we have a static stop loss. A static stop loss that we did not adjust, okay? So, regardless, do we have a stop loss? Yes, we do have a stop loss, but as long as the trend continues, you see what's going on here. Initial risk to reward ratio that we have here was 3.27. Therefore, it's 1 to 3. The second one is about 1 to 2. The third one, it's starting to get less. It's about 1 to 1.5. The fourth one is 1 to 1.5. The fifth trade is about 1 to 1, and then the risk gets larger and larger because you are moving away from the trend on the basis of a static trend. Okay, so trading strategies. This is a trading strategy. You want to apply this to a trading strategy, you can apply it to your trading strategy. You can use, I can bring up any other chart right now and use the same example. It would still work. It's going to be working the same way. Okay, so this is one trading strategy that you can use, and this is trading strategies that I used to use, right? But as I said, I moved on to a better trading strategy because to me, moving averages are lagging. So even with a strategy that's actually not really optimal, which is still lagging, you would still have that potential gain of 7,256 pips, which is a lot. Okay. So let me pause for a little bit and let's go through. Right. So EMA can be used as stop loss. I don't use EMA as a stop loss. And I don't like using EMA as a stop loss. Okay, you can use EMA as a stop loss if your strategy says so. By all means, please do so. In terms of having something as a stop loss, I would categorize it as being a static stop loss or a dynamic stop loss. The one that I have here as an example is a static stop loss. We have a flat horizontal price level. With the EMA, you can move your stop losses down along the EMAs if you want to, but you would have been taken out halfway through. Okay, you wouldn't be able to enjoy all this because you would be taken out here, right? Instead of gaining a potential gain of maybe 1,959 pips, you would be taken out at around 300 pips. Okay, so there are advantages, there are disadvantages. Dynamic stop losses, you need to be there to be able to adjust it, right? And then we can talk about trading stop loss, where if the market moves a certain pips, then your stop loss get adjusted. I tried that out, and I've actually done research into it, and I'll tell you right now. A lot of traders that don't understand risk management and position sizing or position management, they will say, you know what, use a trading stop loss. Okay, it doesn't work that way in a sense where we don't actually know how big a range of a market could be in one day. Okay, so a trading stop loss where the market moves by a certain pips and then your stop loss get adjusted to that, I don't like that kind of trading stop loss. If we look at swings in the market and I want to trail my stop loss, for example, I look at this swing as a significant swing in the market, then I actually would. I'm just looking for here. I would actually move my stop loss all the way from up there to there. Right, so I would actually lock in some of the profits here and minimize all the other losses. That kind of trading stop loss I would use, right? You see that significant high in the market after market move a certain period amount of time, then yeah, I would move my stop losses there. I would move my stop losses here, right? I would move my stop losses here. I would move it. I would move it to lock in my profits. I would do that. No problem at all. Ichimoku confuses me when I change the time frame. Right. Okay. Okay. God's favor only. says, I think this is a lecture for big investors. Most of us here are little traders, but you're teaching us something that our investment can't control. Okay, what can you control? You're off. It's okay. It's off. Don't worry about it. But I'll answer this. No. As a big investors, I don't care where my stop losses are. All right. As a big investor, as a large investor, that's the least of my concern. Okay. As a large investor, I don't even have to maximize my positions. I could just open one position and let it run. Okay. I'm using the daily time frame because it's easier to explain. I can go on a small time frame. If you think you're a small trader and you want to trade on a small time frame and you think that's the best way to do it, by all means try and do it. See if you get margin call and see if you deposit more money in. Okay, I'll be frank here. If I were to say, if I'm going to teach this to hedge fund traders, I wouldn't even be teaching them this. Okay, but it's a completely different thing. But again, if you want to be off, by all means off. That's fine. No one is forced to stay here. But if you guys are still here, then I would have other strategies to share with you. Right? We basically talk about an hour right now just to show you how to maximize one trading strategy. Okay? So, what are the trading strategies that we can use? Okay, I could use Fibonacci, so I can remove all this right now, and I will remove my indicators, and I could show you a trading strategy based on Fibonacci. Do I want to exit? Yes, I want to exit. Okay, so let's go on to a small time frame. I wouldn't be looking at this week. I'll be honest. Let's jump somewhere into. Let's randomly go there. Okay. Random. I don't have any clue on what's going on. Okay. The other trading strategy that I would use would be using Fibonacci. All right. Obviously, with Fibonacci, you need to identify an A and a B. So that would be my A. And that would be my B. Okay. This is the other trading strategy that, I can give you an example of. So with Fibonacci's, I like a break below 23.6%, just because if we have a break below 23.6%, which is here, we basically have a stronger confirmation, a swing has been formed. So I would go in for a short position over here. And I would have my stop loss just slightly behind that. And my initial target would be at 61.8. And this one here, I'm actually going to double it up. Because if I trade with this strategy, I actually have multiple exits into the market. All right, I would have the same stop loss, but I would have a different target at 127.2%. Okay. So, yeah, let me move it there. There we go. Right, so I got target number 1 at 61.8%. I got target number 2 at 127.2%, and see what happens here. I have my stop loss, which is slightly above 1.06 at 1.0610. Okay, first target was hit. So when my first target was hit, I would move my stop loss to break even. All right, so I'm running trade free on the other one. Okay, if it hits my stop loss, then I'm actually going to be okay because I already have this. Okay, so with trading strategies, you always need to have a backup plan. In fact, this is my trading strategy. If I'm trading intraday, right, this is how I do it. I would trade with multiple exits. I could have a single stop loss, but if there's any given opportunity where I can reduce my stop loss to break even, then I would do that. So let's assume we leave this trade running without adjusting my stop loss. Let's see what happens. Okay, I would have been taken out, right, by about 45 pips. My first target was only about 44 pips, so I gained nothing. So if I can move my stop loss to break even, I would still be out with that 40 pips. Does that make sense? So this is a trading strategies that you can actually apply. And if you want to know about this, then please look up the Fibonacci sessions that we went through. Yeah, Chuck Zeus, can you please explain a little bit more with Ichimoku confuses you when you change the time frame? I'm happy to I'm happy to answer that question for you right now. But next time, if you have any questions regarding trading, you know, like an indicator or the previous webinars, if you can come in on the Wednesday session, that's the Q&A session that I would help out with. With this one, if you can explain to me what's wrong with Ichimoku on changing time frame, what do you mean by that? I'll be more than happy to answer it for you. Okay, so pivot point strategy. Okay, let's talk about pivot point strategy. This is FIP strategy. This is something that I actually use. Okay, so let's move on to a pivot point strategy. Okay, let's find something. How about we clear off? How about I use something that I don't actually need to look at here? Yeah, selling in is alright. I can do it selling in. Alright. I'm gonna hide Ichimoku. I'm gonna hide this. So pivot. Okay, so this is the weekly pivot. This is on the daily time frame. Pivot strategy is actually really simple. So I'll change this pivot into a daily pivot, and then we'll go on to the hourly time frame. Hopefully that makes a lot more sense to you. Okay, so with the pivots here, what you're looking for is a transition above or below the pivot point. Okay, the pivot level, when it started, it would really depend. You can actually tweak it, but by standard, it would be about GMT 22. Some people uses GMT 24. Some people uses the brokerage time to do that. But if we have a transition above the pivot, we would actually want to go long. So this is using pivot as a strategy, right? We would go long once price transition above or below the pivot. Okay, so initially you would actually be short on this one here, and your stop loss would be here. Your target level would be R1 or R2. So if your target is R1, that means you're already out of your position. Okay, but if it starts the day below the pivot, then the assumption is that there could be a possibility it would go to support 1. Okay, so you could actually start it the day like so, but in terms of stop loss placement, if you put it at R1 and then your target is going to be at S1, the risk to reward ratio doesn't make sense, because the risk to reward ratio is going to be 0.72, right? So if you use a pivot strategy, do not use pivot levels on the other side as your stop loss, because then it won't work. Okay, so we're moving back to strategies. This side is going to be pivot strategy. Pivot, to me, it's not really an entry or an exit sign. Pivot really is more of a range. This is really more of an indication. This is more of a barrier. This is to tell you, hey, the market could get all the way up there today. The range could be this big, right? That's how you look at pivot, okay? I don't really trade base off pivot, and it's actually very rare for traders to trade off pivot. But if you use pivot and you combine it, let's say, with Fibonacci, okay, then we would know when it breaks above that pivot level, it breaks above 61.8% as well. In that context, then I would I could go long. All right, I could have my stop loss maybe just slightly below 23.6%, and I could use 127.2% as my target level, or I can use R2 as my target level, but let's leave it at 127.2%, because that's going to give me, you know, more than 1-to-1 risk reward ratio as well. So I could use it like that. Like I could use pivot like that. Can it go to 161.8%? This pivot is going to tell us, be careful, there's R2 before 161.8%. Therefore, there's a higher probability it could actually not go to 161.8%. So that's why I would adjust my target to 127.2%. Okay? So that's one way we can use pivot. The other way to use pivot, obviously, if we use moving average as an example just now, we can come back to moving average, right? And we can use the same 5 and 21 if you want. Okay, we could do 5 and 21, and when price move above the pivot level, we could have gone long as well again, and we would stay long in that position until the moving average crosses over. So pivot is there more as a guidance. It's there so that you have a static level to understand, you have a static level to look at as your potential resistance, as your potential support. But pivot by itself, if you want to enter, if price breaks above pivot, you could do that. It's just that you are unlikely to get a great risk to reward ratio, because a breakout above pivot could really take it, like in this example here today, it could move it very close to resistance 1. Okay? All right. So I hope that answered pivot. Daniel uses Ichimoku, the complete system. So far, so good. That's good. So let me try to answer Chuck's here, because Chuck's has been asking about Ichimoku. So let me give some time here. I understand Ichimoku 1 hour is not the same in the 4 hour or day. Of course they're not. So how can you understand the trend when you check the hour to day time frame? Okay. Did I just remove? No, I haven't removed the Ichimoku. So I will remove the, I'll hide the pivot, and I'll hide this. I'll actually delete it, and let me answer this for you. So what do you see on the hourly time frame on the sterling yen? All right. I think we're starting the competition, the quizzes next week. But if there was a quiz today, I would actually use this as a quiz. Anyone that understands Ichimoku right now, tell me, what do you see on the sterling yen? Is the sterling yen in an uptrend or is it in a downtrend? Chucks, maybe you want to answer me on this one here, so I can help you out with this one. This is extra, by the way. This is extra because all the main content is going to get continued next week. This is extra. What do you see on this one here? Chucks, come on, answer me, man. Down. Great. About to cross on the hourly time frame inside the web. Okay. It's technically still in a downtrend, even though it's inside the Ichimoku cloud. It's actually about to transition. So Wilvin is correct. Chuck is also correct. Now, trying to break to the upside, down, right? Trying to break to the upside, Wilvin and Albert is saying that. Okay, so if we know what it is, this is technically still a downtrend, but it is trying to break to the upside. Okay, now, Chunks, let me help you out with what you're confused with. If you look at the trend on the hourly time frame and then you say it's different from the daily time frame, I don't see a difference. It might look different. In this case, they're actually both below the Ichimoku cloud. Okay? Can the hourly time frame show you a different trend than the daily? Yes, because trend, as I always say, trend is subjective, number one. Trend is contained to that particular time frame. Okay, so an hourly trend that you see might not be the same trend that you see on the daily time frame. Okay, so if you are experimenting with Ichimoku Kinko Hill, or if you're trying to use Ichimoku Cloud, you can compare the daily time frame and the hourly time frame. You don't compare the 4-hourly time frame with the daily time frame. Okay? So, tell me, because I pick on sterling yen, tell me what you see and what you're confused about. What is it? What instrument is it that you're looking at? So the question that you asked was, how can you understand the trend when you check the hour to the daily time frame? So the daily time frame says that price is now below the Ichimoku cloud. There's a higher probability that the underlying trend for the sterling yen could be to the downside in the coming days, in the coming weeks, right? For the hourly time frame, it seems like it's attempting to break the Ichimoku cloud, but technically it is still below the Ichimoku cloud. If price goes back down below the Ichimoku cloud, then it would continue its downtrend and then it will be in line with what we saw on the daily time frame. Okay, however, even if this transition above the Ichimoku cloud is actually very, very thin. So there's actually a probability it could actually come back down again below the Ichimoku cloud as well. Don't check on the Euro USD hourly because it's on consolidation crossing up down the cloud. Okay. Thank you for bringing that up. Right. So, as you guys know, every Monday I posted an outlook, right? That outlook, it's useful if you want to know what kind of market condition it is that I always mention about. With the Euro USD, in terms of how you look at the Ichimoku cloud, let's compare Euro USD here. Look at how the Ichimoku cloud is actually in and out. Remember that the Ichimoku cloud is actually 26 periods shifted ahead, so it's actually giving you an insight into what's going on. So it gets choppy. It is already choppy. The cloud itself is choppy. If you take a look at the range and how short it is, the Senko span A and the Senko span B keeps crossing in and out. That's an indication that the market is in a consolidation period. And we have already identified that consolidation period within this blue rectangle. Okay? So yeah, thanks for answering, Wilvin. That's a really helpful one. So, with the Ichimoku cloud sessions that we did, right? We did it should be enough to get you, to give you a jump start on the, at least understanding the Ichimoku cloud. Just don't get yourself confused. I think you're getting yourself confused in terms of looking at the trend in the market. Trend is going to be contained to that very specific time frame. Okay, so you need to know what you want or what your intention is, in terms of that trend. If you are trading, let's say, within the day, is the daily trend going to help you? Yes, it will help you. If you're a scalper, is the daily trend going to help you? Not really, because the hourly trend would be more useful to you if you're scalping the market rather than the daily trend. All right, so hopefully that helps, right? So we got sidetracked a little bit, but the point with tonight's webinar or tonight's session is to give you a look into what we actually really call a trading strategies, right? I actually wanted to give you guys a few trading strategies, but we are out of time, so maybe we can talk more about that next week. But yeah, I'm not here I'm not here for big investors or anything like that. I'm here to help you guys out, especially new traders, to understand what a trading strategy is, because a lot of new traders right now, things have changed, right? You got signal services, you got robo trading, you got all those funny stuff right now. A lot of people are just so lazy right now, they would just call anything a trading strategy. So, before we go on to building your own trading strategy, which is your own trading strategy, not my own trading strategy, I can give you some examples of my trading strategy and then we can build on that. Okay, so next week, if you guys can be more interactive, it would be awesome, because I need your help to let me help you build your own trading strategies. A trading strategies that is actually suitable to your circumstances, to your own purpose, more than anything else. If I were to give you a trading strategy if that's for me, then automatically it's not going to work for you, because you might not trade like me. You might not be like the guy just now that says he's off. He might not be comfortable with having a 500 pip stop loss, right? Some people are not comfortable having even 100 pip stop loss. So one's trading strategy doesn't necessarily work for everyone. Okay, so if you follow a trading signal, if it doesn't work out, you just blame it. As simple as that, right? But it depends, if you're following trading signals, you want the easy way out, maybe these courses are not for you. But if you are really here to learn, if you're really here to be, to learn, to be able to build your own trading strategy to suit your trading style, then come back next week where we'll actually cover that. Okay, but I would say for beginners, trading signals might help, but if you don't understand what is the mechanic behind that trading signals, it's actually dangerous for you. I'll talk about Ichimoku next week. In my case, I'll actually explain it next week because we're really out of time this week. But Daniel, I'll cover that next week. Right? Do we have sessions for upcoming Monday and Wednesday? Yes, we do have Monday session and Wednesday session. Monday session, I think now would be in Bahasa Indonesia. Wednesday session would be as per usual. It's going to be the English Q&A as well as the Outlook session. Okay. So Chucks, if again, I answered your Ishimoku tonight, but if you have any questions regarding trading indicators or what we talked about during the webinar, it would be best if you could actually jump in on the Wednesday session and we use that time on Wednesday to answer out. Okay. All right, guys. So I think we got sidetracked a little bit today, so I do apologize. But yeah. Next week we'll continue on. I think next week it's going to be an hour and a half session because I need to catch up some of the few stuff because I'm supposed to be showing the Ishimoku Cloud stuff tonight, but it has to wait until next week because I think I spent a little bit too much talking about how to maximize a trading strategy. Oh yeah. Okay. Yeah, market is quiet. But hey, Wilvin, market is quiet, but take a look at what we've done on Mondays and Wednesday. Pretty well on the Pound USD and the Euro USD, right? So despite a quiet market, that's still 182 pips that we take a look at on last Monday, right? So you guys got in on that. Congrats, but you should be out. Okay. Yeah, we can use that Wednesday time for Q&A. In the Wednesday session, let me explain this. Okay, if you guys are not watching this live and you guys are watching this later on, the Wednesday session is actually Outlook and Q&A session. It's actually meant to be a Q&A session, right? So anything that's trading related, you ask me on Wednesday. It's not that I have to give out, hey, where the euro is going to go on Wednesday, where's the dollar yen going to go and stuff like that. It's not like that. The Wednesday session is an Outlook session, But if you have any questions, it's also a Q&A session. So Wednesday is actually an open session. You can actually ask me anything. What's my outlook for the next quiet week? Depending on my basing on my experience. 25th, 20 Christmas is on. By the way, Merry Christmas, everyone that celebrates Christmas. Other than that, have a great holiday on over the weekend. Next week, from my experience, it's actually going to get a little bit quiet. We start with 26. 26 is actually Boxing Day in Australia and the UK, I believe. So it's actually going to get a little bit quiet. It might pick out a little bit on the 27th, 28th, 29th, and 30th. But that's about it. Based on my experience, we should be looking at about the same range as this week. Not huge. But still, even a range that's actually small on the pound USD, that's still 182 pips there. On the Euro USD on Wednesday, I believe it was Albert that wants to short on the top of the blue rectangle there. He would have netted 76 pips. So yeah, I think there's still going to be opportunities despite whatever the market is. All right, so let's wrap it up for tonight. Have a great Merry Christmas. Have a great weekend. Have a fantastic holiday. I'll see you back here on Monday. Everyone else would be on Through the Outlook. And then we have Wednesday, and then we'll wrap up with the trading strategy series next Friday. All right. Have a great time, everyone. Stay safe, and I'll see you soon.